Now what we are going to do is we are going to see first of all how to adjust the stock price. Okay, adjusting for what? Adjusting for stock splits or bonuses. Specifically bonuses is what we are going to address here. Okay, and next is what we will look at, plotting of PE band chart. Okay, now this is the data that I have downloaded from NSE. Okay, now what we will do is we will just keep the relevant data for us. Relevant data for us is closing price. Okay, so this is what we are keeping. Okay, now there is a possibility that there are certain number of duplicates over here. So we go to data and we say remove duplicates. Okay, and we just say in both the series we have found two duplicates. Okay, and just we are removing those duplicates. Okay, so what we are left with is the close price. Okay, now to see whether this price is adjusted price or actual price, or there have been some instances where the company has given bonuses or split. We just plot a quick chart, which is a line chart. Okay, and in the line chart you will see there are two drops. If you observe carefully, there are two drops here. Okay, like one of them is here and other is over here, a significant drop. Okay, now these drops are because of the bonuses the company has given. The company in consideration is TCS, so the bonuses the TCS has given. Either it could be bonus or it could be split. Okay, that information you will get only by looking at the company announcement or corporate announcement, either in Bombay Stock Exchange or in National Stock Exchange. Okay, so so first of all we have identified that there are bonuses or splits. Based on the information we already have, we know that these are bonuses, and the bonuses are of 1:1. Okay, so when there are 1:1 bonuses, the stocks will fall down by 50%. Is that clear? Right. Okay, so if the stock falls down by 50%, okay, we need to identify exact date on which there has been such fall, so that we can actually readjust the stock prices. Okay, so readjust to what? Now if you see, this current price is after two bonuses. This portion of stock price is after one bonus, and this portion of stock price is before any bonus. So there is inconsistency in the way the stock price that we have or we are dealing with. Okay, so to have consistency throughout, we will adjust the historical stock price based on what is currently prevailing stock price, meaning that we will have one bonus impact on this historical price and two bonus impacts on this stock price. Okay, because it is 1:1 bonus, from this position to this position we will say that we will divide the stock price by 2, and from here to this level we will divide the stock price by 4. But we need to identify where did this bonus happen, on which date. Right, to identify where did this bonus happen, we will first of all just calculate the returns. Okay, returns is a simple calculation, right? Okay, after calculating returns, we will just double click on the screen and just calculate returns for all the time period. Okay, after returns have been calculated, we will say we want to identify bonus flag, right? Okay, so under the bonus flag we will say if, okay, so first the logical test has to be there, right? So if this number is less than minus 45%, now why minus 45% and not why and not equal to 50%? Okay, because on the day of bonus there would be some movement on the stock, because there is fall in the price, some people may want to buy it, and that's why there will be some correction, or people may want to exit out of the stock because bonus is already effective. Okay, so for that purpose we are saying minus 45%. Okay, so if that is less than minus 45%, we want Excel to display Y flag or else display nothing, so we keep it blank. Okay, and after having done this, we simply double clicked it and we have got the bonus flag. And now we will go to data and we will look at filter. Okay, so under the filter we will just identify Y, where the bonus actually happened. Okay, and you will see that bonus happened on 26th of June, right? Sorry, 28th of July 2006 and 16th of June 2009, so that we can trace these dates after the filter. After we remove the filter, we are putting this X mark over here, okay, so that we can actually trace that filter, trace those dates, okay. So because we have X put in over there, we can now have access to those specific dates, okay. So if you observe over here, there is a fall in the stock price here, and the exact percentage is 50% in this case. In the earlier case, the fall has been about 51%. You will see from 1899 the stock has fallen to 928. Okay, the bonus dates, okay. Now after identifying bonus dates, our job is next to adjust the stock price with the current reality. So how do you do that? So if you look at the chart that we have drawn, we will keep prices from here till here same. Prices from here till here will be divided by 2, and prices from here till here will be divided by 4. Perfect. So let us go to the bottom of the pile first, because the most recent numbers are at the bottom, right? So we'll say equal to this number and say just copy, and we'll say command shift or control shift up arrow and say control V. Okay, so I think right. Okay, then we will say this number, which is the day before the bonus happened, exactly one day before the bonus happened. From this date till the date the earlier bonus happened, we will divide by 2. So copy this, and we'll go up again and say control V, right? Yes. And here you will see there is one more bonus, and here you will say this number divided by 4. Okay, then you say copy and go to the top level and say right. Okay, so this is adjusted close. Okay, and if we want to draw this chart, okay, with this price, okay, all that we will do is we'll just move it from here to there, and you will see the stock price has actually shifted. Can you see that? Yes. So have you understood how to go about no, how to go about calculating the adjusted price? Okay, of course when the bonus ratios are different, you will have to have different logic under the bonus flag, because it was 1:1 bonus. We had seen for 45, yes, 45% or less than 45%, right? But there will be occasions where the bonus is 1:2 or 2:1. For 2 shares, 1 bonus.
So in that case, what we should
do? The ratios would be different. Okay. The ratios
for example, if it is 2:1, then
let us say 2:1. So what does it mean? For 1 share, a company is issuing 2 shares. Yes. So after issue of shares, how many new shares will be available? So let us say, let us look at it from this perspective. Before bonus, right? And after bonus. Okay. So before bonus, let us say number of shares. Okay, let us say number of shares before bonus were 100. Okay, and we are saying bonus of, okay, 1:2 or 2:1. 2:1. How do we read it? It is read as for 1 share you issue 2 shares. Okay, so it's always reverse. Yes. But in case of split, it is straight. Okay, so if you are talking of split, okay, then we will say 1:5. No, then there is always 1:5, 1:2, okay, 1:10, something like that. Okay, so even though it is read as 1:5, it is written as 5:1. So while reading, you will read it as 5 shares for 1 share. In case of bonus, it is for 1 share 2 shares. So if it is 2 shares for 1 shares, sorry, 2 shares for every 1 share, how many shares will be issued?
That will become 200.
Sorry, 200 new issue will happen. New issue will happen. Yes. So there will be, so total new number of shares will be 100 plus 100 into 2, because for each share of 100, 2 additional were
shares
issued.
and okay, so it will become total 300.
Right. So total shares will be 300. So if the number of shares triple, the stock price will come down by
3.
not 3,
I mean
1/3.
1/3.
So
yes.
by so it will fall to 1/3.
1/3.
So it will come down by how many percentage?
Oh,
67% approximately. So you're getting the point. Let us look at
Yes.
that. Okay, so stock price, I'll say market cap. Okay, so market cap. Okay, so let us say stock price was 300. So market cap in this case is this number into this number, right? Now given that market cap in both the cases should remain same,
Same.
okay, let us look at how much the stock price comes to. So it will be 100. Okay, so it has become 1/3.
1/3.
So 1/3 means how much the stock price will fall by. The stock price has become 1/3, but fall in the stock price is how much?
That is
So fall in the stock price is 300 minus 100 divided by 300.
300. Yes.
Okay, so this is the fall in the stock price. Okay, and that is 66.7%. Now this is what you'll have to always calculate based on what kind of bonus has been issued. Okay, so you'll have to really check, or sometimes you may not have access to corporate news, but by just looking at numbers you can arrive at this conclusion.
Yes, yes, yes.
So you got this?
Correct.
Confirm?
Yes.
Good.